Good morning and welcome everyone to 10 Figure Business Mastery live Wednesdays. Today is Wednesday, May the 3rd. Guys, we are in the month of May 2023 already. This year is going by so fast. And man, what are you really accomplishing this year? You want to take a look and see how you've done so far this year. Really take that in and then also see exactly where it is that you want to take this business from here forward. So I'm definitely glad to be here with you today. We're in this conversation about structures and moving things forward inside of 2023. And we're going to continue that theme. Last week we introduced S Corp structures, and we're going to actually continue that conversation today. But before we get started, I just want to go ahead and recap for the new people that are on the line here today what we are about. So this is 10-figure business mastery. If you're not in our Facebook group, but if you're watching this from like YouTube or another platform that we're streaming from, welcome. You want to actually get access to this Facebook group. You find us through 10-figure business mastery on Facebook. This won't always be live broadcasted on YouTube for the weekly live webinars. Really, this wants to be exclusive to our mastermind group, and to be able to cultivate an environment where we actually build each other up, we edify one another to get to the next levels of business inside what we're doing in life. But this is me. I'm Cheston Bulgin with By the Bush Consulting, senior consultant at this organization, as well as the founder. And you can reach us at bythebushconsultants.com or at youraccountingsuperhero.com. This is my email. Be responsible with this email. Don't just blast me with emails randomly. If you're going to contact me for a reason. All right. So we handle accounting, of course, and QuickBooks online. As a matter of fact, we have a boot camp coming up this weekend. If you did not know, it's going to be a QuickBooks online boot camp teaching people how to use the software to really enhance the way they do business, get more profits, and increase their profitability through their job costing and profit margins, and creating those systems and structures, workflows through QuickBooks that enable them to scale their business very quickly. And you can have real clarity instead of confusion, which is what a lot of people have inside of the software. It's a really good tool to be able to take if you have a smaller business, when I say small business, you're doing, under a couple of $1 million a year, inside of what you're doing, what you're up to. The QuickBooks Online is a great tool for you to use in order to get that clarity, that systematic infrastructure inside of your business, so that you just know what to do day in and day out to deliver the result that you're looking to get out of your business. Okay. So we do that. We have this training coming up on Sunday, May 7th. Make sure you sign up for that. If you don't know how to get access to it, send me a message. We'll get you the links to get access to that webinar, that boot camp rather. We also do tax planning. Like, tax season is just finished. It has just finished. And a lot of the time, business owners, we handle taxes as a reaction. What do I mean? All right. It's like we come to tax season and we file the taxes. It's like, man, what happened? We find out during tax time, like what the deal is with how we handle taxes. And it really wasn't like we were planning throughout the year on how that was going to look at the time that we filed. This is how it wants to be. We want to have an actual proactive plan that we can execute on day in, day out, so that there are no surprises. We actually have positive results when it comes to our tax situation. We have more control over that. Okay. So that's what we help people with, is make sure they have a measure of control over their taxes, which is one of the things we're going to be talking about today inside of the structure of an S Corp. All right. And we do operations consulting for businesses. We look at whatever gaps you may have in your systems or how you're operating, and we go to work on helping you resolve those. Okay. All right. Quick disclaimer before we get started. The following is for educational purposes only and is not to be considered financial, accounting, or legal advice. Please consult your tax, accounting, and or legal professional for specific advice. And of course, every time we do this, we want to get your feedback, just to know what you'd like us to bring to the conversation. I'm always looking to deliver something that's going to be of tremendous value to you. It's going to actually give you actionable things that you can take from these webinars and use them right away inside your business to help you make more money, spend less time, get more results, and achieve freedom, wealth, and legacy inside of what you're doing. Okay, so that's the intent of this live webinar series. So if you have something that you want to discuss, or you're really confused about a specific issue when it comes to business structure, like what we're talking about today, or if it comes down to just financial literacy, you don't understand how to read financial statements, what things you should be looking for, or if it's in the area of, just building businesses from the ground up, and those things that we're looking to create beyond inside of where you may be stuck in your business, yeah, bring those questions to the table, all right, so that we can help you blast beyond those limitations that are perceived, and then you can really create the next level of life for yourself and for your business without any limitations. So this is what we're founded on. We have 4 tenets that we have at the base of what we do here. Number 1 is intentionality. We call this mindset mastery. Number 2 is financial mastery, which is also financial literacy. 3, structures, which is also system mastery. Put systems together. Systems are what drive your business forward, by the way. If you don't have the proper structures and systems in place, then you'll be stuck perpetually. You'll never grow beyond where you are inside of your business unless you have the proper systems in place. And then we have actions. Execute, baby. Everything comes down to how we execute day in and day out. We can have everything else in place. We can have like the correct mindset. The mindset might be right. It's like, okay, I'm going to come out here. I'm going to focus on, building my business to 10 figures. You can have that mindset. Yeah, great. You can have financial mastery, like you understand like financial literacy. You can read the financial statements all day. You understand what the numbers story is, right? And you can have all these systems, right? You can have all the technology and all the structures in place. But if you're not taking the actions day in and day out, none of that stuff means anything. You're not going to produce any result whatsoever. All right. So that's what we want to really hone in on. Everything else serves to bring it down into these actions. So that when we take these actions, these actions have weight, they have power, they move life forward. That is the intent behind everything that we do. So we're driving things forward in 2023, talking about structures still. And last week we started talking about S corps. We did a real brief overview of what pass-through entities are and disregarded entities. Just to give a little bit of a background, we'll talk more about these maybe in another live session, live webinar. Because some of you are set up this way, like with sole proprietorships, partnerships, like you have LLCs, and when you want to understand what it means. I was on a call with somebody yesterday, and they were talking about their LLC and how they should get it structured. Should they start a C corp? They heard about somebody getting sued, and LLC got sued, and the owner got sued, and they wanted the protection there, from the LLC. And they figured like, well, how should they actually structure their business? Is the LLC good enough? So we'll talk about these things and get real clarity. And just a base point here. These structures, like LLCs and corporations, they are designed to separate the business activity from your personal life. By design. So if you have an LLC, by design, it's there to give you that protection. Now, there are other issues that come into play once you have that set up to make sure you're compliant with that structure. in order for it to have that level of protection that you're looking to have it produce. Okay. And that goes for any structure, really. Okay. But we talked about this last week. If you don't understand what disregarded entities are, and how it's treated tax wise, just look at the video or recording from last week. Same thing here with flow through entities. S corps are what we call pass through. LLCs are pass through entities as well. And here we go. Just a real recap of S corps just before we get into today's conversation. All right, so this is a corporation that elects to pass corporate income, losses, deductions, and credits to its shareholders. This is the definition of what we call pass through. Okay. Now, the difference between an S corp and another corporation like C corp is that S corp does not get taxed on its income. Income of an S corp does not belong to the S corp. The income of an S corp belongs to its owners, which we call shareholders. All right, and these shareholders handle that income tax obligation on the individual level. All right, so there's no tax for an S corp. They don't get taxed. The owners of the S corp get taxed on the income of the S corp. Whereas a C corp, this is taxed. This is its own being that gets taxed on its own. And the owners get taxed too. All right, so this is why we have double taxation in a C corp. It gets taxed at the corporate level, and the individuals who own the S corp, like shareholders of of a C corp rather, they also are taxed on the dividends. And what if you're taking a wage from there? Of course, you're taxed on the wages that you take from a C corp. Okay. And also, S corps, they're restricted to 100 shares or shareholders or less. They have 100 or shareholders or less, and there are no limits to the amount of shareholders you can have in a C corp. So, and we're going to talk about C corps because they're fantastic when we're looking to really take businesses to the next level. But today, I really want to get into like what it looks like to have an S corp for your small business, why you want to have it, some of the things about running the S corp like that are misconceptions. We want to get those things cleared up. Okay. One of the main reasons I want to talk about this today is because when we run a business, there's a lot of concepts out here. A lot of concepts about how to run your business, and what works, what doesn't work. And then when the dust settles and the concepts go out into the ether, how are you actually using this to execute every single day to drive forward a result for yourself, for your business, for the people in your lives? A lot of the times we get an idea, we start doing things, and we don't actually understand how to execute this in a way where it delivers a specific outcome for me. Okay. One of the biggest pet peeves I have, people want to give information, tell you how to like conceptually give you an idea, but then, well, what is the result at the end of the day? Am I actually doing the job? Am I getting the outcome that I was here to produce? And do the people that give me this information, provide this information, give me these concepts, do they really care about me receiving and getting that result? Well, let me know, and I care about you getting a result. So that's why we're having this conversation, so that you can actually drive a result by understanding the nature of your structure and why you're using it, and some of those things that I want you to take right here, right now, and for the rest of your life, and move those things forward in life so you understand exactly what you're doing, so that there's no confusion, and you're going to deliver that result day in and day out. You're actually working towards something, and you're using the structure to your benefit, okay, and without any confusion, just crystal clear. All right, so so we talked about the benefits. There's no tax to the S corp. Self-employment tax. All right, this is the main reason that people talk about S corps. One of the more popular reasons that people talk about S corps is because you have some control over your exposure to self-employment tax, which could be a huge reduction in your tax liability. Okay. So typically, if we're running an S corp, or actually just back it up a little bit, if we're running a regular business, now we're selling products or services, going out here, and every dollar that we make, like the profit wise, so after all expenses are said and done, we have a profit. This is what we call earned income. Typically, with earned income, there's something called, Social Security, insurance. This is just for your retirement. This is what people pay into in order to ensure that there's money there and this pot for retirement for when you retire. It doesn't necessarily work that way today, right? Because the money that we actually pay into it gets used up for the people who are in retirement now to pay their wages. But anyway, so there's an expectation that everybody's paying into this who's earning their income. So if you go to job, you have a paycheck, you earn a wage, you'll see you have this silent partner called FICA on your paycheck. Is always taking their cut. In addition to your federal income tax withholding. All right, so there's your federal income tax guys, silent partner number one. And then silent partner number two is FICA, Social Security and Medicare. All right, so the FICA partner is what we call the self-employment tax portion of your income. This is what your obligation is. All right, now if you're an employee of a company, you pay your portion of that FICA, which is half of the amount, and the employer pays their half of that amount. Right, so your half is 7.625% between the two, Social Security and Medicare. And then the employer has their half, 7.625%, Social Security and Medicare. Boom, that's taken care of. Obligation fulfilled. Now, what happens when the employer and the employee are one and the same, right? So you own a business, right? You're a self-employed individual, you're sole proprietor. Well, now you have both sides of the coin. You got to pay 7.625% of the employee side and 7.625% of the employer side. So you have 15.3% liability here. So this is one of the main reasons S Corp is beneficial, is because now you have somewhat of control over how much of this income is considered self-employed income, which is obligated to pay self-employment tax. Portion of the profits from the S Corp are what we call passive, right? And that portion is whatever you don't pay yourself at a reasonable wage. All right, so you pay yourself a wage that has self-employment tax associated with it, just like any paycheck. You have your portion of it as an employee of your company, and your company has their portion as the employer of the company through a paycheck. And then the rest of the profits, unlike any other self-employed company or individual, are passive. You don't pay which means you do not pay self-employment tax on the other portion of the income. All right, so this is one of the main benefits. All right, the other thing is asset protection. Like I said earlier, these structures are designed to protect your personal assets from the business activity. Okay, and then of course, strategic tax planning is available through this. All right, and one of the great things is you can have multiple shareholders, so you can capitalize this thing. Right, so there's so many things that we can do with an S corp. Pretty exciting things when it comes to capitalization, taking on shareholders and building up capital and everything. But then we have this other cool thing that we use it for as far as tax limitations, tax reduction strategies, rather. All right, so a couple of things. You got to pay yourself a reasonable wage in order for you to be compliant. You also need to have an additional tax return. This can be another cost to you. Whereas if you were a regular sole proprietor, you wouldn't have an extra tax return that you would file. You would have a Schedule C on your regular individual return. Same return, just another schedule you put on it. S corps required a completely new, separate return. And then if you file this thing late, you don't want to do that. You're going to pay a lot of money, bro. All right? You don't want to file this thing late. Okay. We talked about this a little bit, and we're going to get into more detail today. All right. So we're talking about, paying yourself a wage and then what distributions look like. So the technicalities of it, right? This is really what I want to get into. What does it really look like to run this thing day in and day out? So we're talking about when you should use an S corp and why. We hear a lot of things about what structures to use. People talk about S corps. They're a sexy topic in a lot of spaces. But when is it right for you to actually move into this thing? A couple of things. When you're selling products and services, you have earned income. So this is when you want to actually open the conversation up for S corp. If you're not like selling stuff, like for example, if you own if you're doing like real estate, like you're just investing in real estate, you're not really selling products or services. This is more so a passive income structure. Like you have like rental income, short-term rental, long-term rentals. You're acquiring properties and you're selling properties off. Like at a certain point in time, you acquire the assets, you hold them, and you may sell them off at a later time for increased gains on the investment. So this is not something that you would typically use an S corp for. You would use an S corp when you own a trucking company. You're providing a service. This earned income. This earned income comes into play when you sell a retail. You have earned income that comes into play. You're a contractor. Earned income, this comes into play. And even in some cases, as a real estate broker. Now you're providing a service. Right? So now this comes into play. Hopefully that makes sense. Like when you start earning income through providing a service or selling a product, this is when you want to open the door for that conversation. Why? Because now we're talking about what we just said before, which is your self-employment tax. Right? We want to have a strategy in place to reduce self-employment tax. Okay. Now, yeah. So now I know I'm doing this right. I have a a business where I'm providing a service or selling products. So yeah, I'm in this conversation now. What next? Income. Right now, there's a cost benefit to this. Now, if your self-employment tax isn't going to be a whole lot, you don't need to really move into an S corp structure because there's not really much benefit in you actually paying for the extra return, having more compliance inside of the structure, like payroll, accounting processes. That's going to be an added cost to you, which is most likely going to be more so if you're not making more than $30,000 net income through that business. It's going to be more so cost to you than it's going to benefit you, right? Typically, like a return, for example, it can be cost between $1,000 and $2,000 to file an S corp return with most accounting firms. Now, if you think about payroll costs, it's going to be a monthly expense. You're going to be paying somewhere around between 40 and $80 a month for payroll costs, just to have payroll service provided. Then there's administrative costs like time involved in cutting out payroll and everything for yourself. And then you have whatever bookkeeping software, which is something that you may have as a regular business, whatever bookkeeping and accounting software you use. So all these costs start adding up to comply, right? So you figure we got $80 a month inside of your administrative like payroll costs. That's another $1,000 really that you're investing into this S corp structure. So right off the bat, that's about $3,000. Now, if you have 30,000, $30,000 in net revenue means that you're actually paying about $4,590, almost $4,600 in self-employment tax, right? With $30,000. Now, you figure half of that is what you would save in self-employment tax, which is right around $2,295. Okay. So you got to consider this. All right. So that $35,000 mark, it's really like you're breaking even to the structure that you've created for the S corp. All right. So you want to take a look. Is that what is actually going to give me the result that I actually want to get out of this, which is really saving my money. I want to keep more money in my pocket. Is that what the result is? So if you're doing this, you want to take into consideration and count all of the costs involved. All right. You want to understand what the benefit of it is. Your reasonable wage is going to be maybe 40% of what it is that you're making for net income is concerned. And is that really saving you a whole lot in self-employment tax compared to what you're making and what you're spending out in a tax return and compliance? Okay. Now, the other thing with the S corp is that you're committed to running your business in compliance with S corp standards, which means that you're going to have annual meetings, which means you're going to pay yourself a reasonable wage, which means that you're going to have separate accounting and everything for your business, which is something that you want to have for any business anyway. Okay. All right. So those are the things to consider when you're actually wanting to move into an S corp. Like, when should you use it? When you're meeting all these criteria, where you say, okay, I'm making a good amount of money with my business that provides a product or service. All right. Now I'm actually going to save some money in self-employment tax. We were able to shift a lot of people into this structure when it made a whole lot of sense because they were making some money with their business. We had a lady that came on with us, does some type of occupational therapy business. She's always been a sole proprietor, and she's always had to pay money out of pocket for her tax return. This is the first year ever that she's getting a refund because she switched over to an S corp last year. Right, so it does make a difference. It puts money back in your pocket when it does make sense. There was a real estate broker who came to us before. She was a C corp. For whatever reason, she chose C corp, and then she was having a whole portfolio of her real estate that she owned investment wise in her personal name, which was a lot of real estate that was showing up on her Schedule E. All right, she had Schedule E caused her return to be somewhere around almost 300 pages of a return, right, with her Schedule E, right? But she was experiencing audits every single year, and she was overpaying $30,000 plus every single year in taxes, just because the structure was not aligned with how, in a way where it would benefit her, is what I want to say. But by shifting this over, she was able to save $30,000 per year in taxes. She was able to eliminate all audits. Okay, now these are people that are in the conversation of having S corps. But if you're a small business, right now, you're looking at, you're looking to grow and looking to get to that level. You want to understand, when is the time to jump and make that leap into S corp? When is it going to make sense? Okay. So what about protection? We talked about, like, these structures are designed for protection, but they only work when the behavior matches what you're actually using here. So you have to comply with the S corp structure, right? Which means that you are paying yourself a reasonable wage. You are having your annual meetings. You do have your accounting setups, right? You're running your business separate from yourself, right? Now, what does that really look like? We talked about, like, wages versus distribution, and I want to get clear on what a distribution is versus wage portion of how you take money from your business. Because at the end of the day, your business is there to produce you an income, right? It's produce and create long-term wealth. But it's not just that, though. It's there to support an economy. Ideally, you want to hire people, enough people where you're making a difference in the community and the economy in general. So you want to have enough cash flow there to support, the paying the payroll, investing in research and development, growing the company, taking it to a whole new level, giving your business longevity. Right. At the same time, we also want to make sure that it is paying your bills as the owner. So what does that really look like? All right. So one portion of this is wages. We already understand that we got to pay ourselves a paycheck. Set yourself up a payroll and then pay yourself a paycheck. Now, at some point, you want that paycheck to be what it will be enough to provide for your cost of living. All right. And you want to make it so that you're not overspending in self-employment tax at the same time. The difference maker, let's say that you're paying yourself, let's say your company makes 100,000 net profit. All right. Say you just get started out and your company's just hit 100,000 net profit. And you're paying yourself a wage of 40,000, which means that 60,000 is just considered net profit of the business, which is your income personally from that business in terms of distribution income. And I'm getting technical with you guys on this call. I didn't want to get too technical with this, but I want to make sure that you understand like the differences in the types of income, the nature of income you take from your company, so that you can understand how to maneuver this in the day-to-day. So when you have this distribution income, 60,000 in this scenario, this is not subject to the self-employment tax. This is also income that you need to run the business. How do you get this income out from the business, a portion of this rather, from the business to you? We call this like giving yourself a distribution, or cutting yourself a check from your business in the form of a distribution. I've found that this is a subject that is a little bit confusing with some people that we work with. Right? They don't understand, well, how do I do that? Well, set yourself up on an auto draft, like auto draft transfer, or cut yourself a check every period for how much you need to support your personal life. That makes up the gap between what you got paid in a paycheck and the amount you need to actually support your cost of living. So if you get a check every week, check may be $1,000 that's subject to the self-employment tax. And then you may need another $1,000 to support your lifestyle. So the other check would just come straight from your business to yourself, or it could be a transfer from your business to your personal account. All right. And it wants to be marked and tagged as a distribution, owner distribution, or owner draw. More technically, inside of an S Corp, this is called a distribution. All right. When you move into an S Corp, this is what this is called. All right. So when you extract money from your business and pay yourself personally outside of payroll, this is a distribution. And this is what's wanted for you in order to make sure that you have enough income to support your personal life. Okay. And it wants to be this way. You want to have a clear accounting of, okay, I'm paying a distribution check or a transfer each period, and it is marked as such in my accounting. So you have a complete, distinct record of that. This way you make sure that you are protected, you're compliant, and everything is working for you personally, income-wise, and everything's working for your business for it to stand on its own. All right, hopefully that makes sense. Guys, it is 10:33. We want to get off this call now. All right, but hopefully, like, the whole technical aspect of what we talked about today wasn't too much for you. The idea is for you to make sure you understand, well, how is this S Corp going to work for me? Okay. And some of the things that we haven't talked about today, we want to get into in another conversation when we talk about capitalization. Well, how to get more injection of capital into your business through shareholder equity, and how an S Corp can work with that. All right. So stay tuned and be in the conversation for how to really catapult your business forward by getting unlimited capital to run your business. All right. Thanks, guys. We'll talk to you later.